Good afternoon, ladies and gentlemen. In recent years, fintech companies have introduced a lot of products and services throughout the internet. Now, one particular category of those products is the digital currency. Now, the most famous example, let's say, of digital currency is Bitcoin. And Bitcoin is built on blockchain technology as well as distributed ledger technology. Now, the rising interest of people and financial institutions with this type of technology, as well as the Bitcoin itself, had led several central banks throughout the world to do some sort of initiatives to study, do some researches, and even do some proof of concepts in what's so-called the central bank digital currency. Now, before going into details, let's go quickly over the types of currencies. Now, throughout history, we've witnessed a lot of types of currencies, starting with commodity money, which is derived from precious metals like gold and silver. Now, unfortunately, we don't see this type of money anymore because it was ended by the Nixon shock in 1971 when the relation between US dollar to gold was cancelled. Another type of currency is the representative currency or representative money, in which a note can be redeemed for its stated value in physical commodity. And again, we don't see this type of currency anymore. Now, the third one is the fiat currency, which is the dominant type of currency nowadays. It's a government-issued currency, and the value, it doesn't have intrinsic value. The value comes from the relation between the demand and supply. Now, this currency is issued as a legal tender from the government, and people exchange it on that basis. Now, there has been some attempts to do some sort of e-money in the 80s and in the 90s, where a central bank will issue some sort of token representation of the money and sell it for the banks, and banks will then again sell it as a product for customers. But this model failed as well, and nowadays we use the term e-money as a general term to refer to any electronic or digital currency. Then there is the era of the digital currency. Now, in digital currency, we have multiple variations. The most two important ones are the virtual currency and the cryptocurrency. Now, when we say virtual currency, it's a type of currency that is utilized and traded inside a virtual environment. So it's only valid within that virtual environment. You cannot use it outside that environment. You can buy goods, you can buy services and sell services inside that environment. And the most obvious example are, if you are familiar with online games, multiple online games throughout the internet uses this form of virtual currency. So there is a game that's called Second Life. You can use that game, you can have money, you can buy stuff, you can buy services, you can rent a house, you can do virtually whatever you want. But that money is not backed up by a commodity or by legal or physical money. It only resides within that virtual environment itself. And finally, we have the cryptocurrency. Now, cryptocurrency is a digital currency that uses encryption techniques in order to regulate the generation of money as well as to verify the transfer of funds. And those currencies are currently works independently from any central bank. For example, Bitcoin, it is a decentralized form of currency that is exchanged throughout the internet. Now, how does digital currency, or let's say blockchain-based digital currency, work? Now, let's take an example. If Alice wants to transfer some money to Bob, what Alice will do is it will create a message. It will use a secret key to sign that message, and here we are referring to digital signature. That message will be transferred through the payment network to the receiver, which is in our case Bob. Bob will use the shared key of Alice to verify that transaction. Now, for you who are familiar with PKI, this is exactly PKI technology. We are creating a message, we are creating a signature, and then we are verifying that signature on the receiving end. Now, one might ask, what is the difference between the existing payment systems that use PKI technology and this form of technology, the Bitcoin and the distributed ledger. First of all, the current payment systems are all about messaging. They are messaging systems. They use message to transfer a piece of information saying, I want to transfer money from my bank account at bank A to another person at bank B. This does not entitle the transfer of funds. There is no transfer of funds yet. The message will have to be received by the receiving party, the receiving bank, and central bank might be involved in that process. It has to be verified, and then there will be the posting to the receiver's account. And that posting can take place in real time, or sometimes, if we are talking about deferred net settlement systems, it will take maybe 1 or 2 days in order to be posted in that bank account. Whereas in digital currency, when we transfer the message, we are actually transferring the money itself. We are transferring the value. As long as you receive the message, that's it. You have the money and you can retransfer it again. Now, those information that we are exchanging, the messages and the payments, are recorded somewhere. And that place is called a block. It's a record, a digital record that exists within the network. And that transaction is recorded in that block. And if I retransfer that money again to another person, another record will be written in that block. As we go on and transfer the money from one person to another person, we will have a complete log of all the transfers that happen to this currency. Now, the block has physical size. Once we reach that size, a new block will be created, and that new block will be chained to the previous one, and hence the term blockchain. Now, we are all coming from banking industry, and we know that if we want to transfer money, and if we are talking about accounts and balances, we need to have some sort of ledger. And blockchain technology utilizes ledger to store all those information. The difference is we are not talking about centralized ledger. We are talking about distributed ledger. Those blocks of information are scattered through multiple nodes within the payment network, and all of those ledgers are synchronized in very advanced techniques in order to guarantee the correctness of information, as well as to guarantee consensus that this digital wallet account, for example, have this amount of money. Now, what made blockchain and Bitcoin popular? What are the benefits of implementing such a currency? The first obvious example or benefit is there is no need for physical presence. I can use any mobile device or internet-based devices in order to initiate transaction. And as we mentioned, we are talking about immediate transfer of value and ownership. Unlike payment systems, I don't have to wait. If I send a transaction using blockchain, that's it. It's final, it's irrevocable, I have the money, and I can do whatever I want with that money. And hence, there is no need for clearing and settlement. So people throughout the internet are exchanging bitcoins without having to have a clearing system or a settlement system or any type of payment system. And since it's called cryptocurrency, it uses security infrastructure and security encryption based on PKI technology and other more advanced technologies in order to secure the exchange transactions. And finally, it is non-reputable. So if the transaction is recorded in the block, this means that multiple nodes within the network had consensus on that record. And it is final, and nobody can say, no, this money does not belong to you. Now, those benefits, as well as the rising interest of digital currency, had led central bank to think of having central bank digital currency. And central banks realized that there might be more benefits for implementing digital currency. If a central bank implemented digital currency, it will promote cashless transactions. Now, again, we're talking about furthermore reducing the amount of cash in circulation. And it will also foster financial inclusion, because if I want to issue a wallet, for example, it doesn't have to be a bank user in order to use that wallet. any boy or any elderly person without bank account can have a digital currency wallet and can use that wallet to initiate transactions. Central banks can also enhance the implementation of monetary policy by having this digital currency. And in addition, it will provide audit and control over micropayments. Most of the transactions nowadays, especially small transactions, take place in physical cash. So if we can find a convenient way, an easy way to issue or to use those micropayments using digital wallets, then even central banks and banks can have control and monitoring over those micropayments. And it can provide real-time information on the money distribution and movement between individuals and companies, which is something we miss right now when using cash. You cannot control cash. You cannot expect where is the cash, who is using cash, who is not using cash. You cannot have those types of information. And also, all those benefits will lead to reduce the transaction cost. If we are talking about cashless transactions, there is no need for handling cash. There is no need for issuing cash. There is no need to transfer cash and the destruction of cash and the collection of cash. All those resources and the money needed for handling those operations can be channeled into reducing the transaction cost and services that are offered from commercial banks to the customers. We were saying that it will reduce the transaction cost. Now, another indirect way of reducing the transaction cost is by having all people using digital currency, by having mobile devices and internet-based connections to initiate those transactions, we will be further reducing the need towards having ATM machines and branches. And again, banks can utilize the reduction of cost and from reducing the amounts of ATMs and branches towards having reduced transaction cost. Another benefit would be the economy, the efficiency of the economy. By accelerating the money cycle and the time that is needed to conclude financial transactions, the efficiency of the economy will be greatly enhanced. Now, in order to implement a digital currency, we need to have an ecosystem. Now, the main players of this ecosystem would be the central bank, the commercial banks, and third-party fintech, as well as service provider companies. Now, central bank is a vital member within this ecosystem because central bank is responsible for the monetary policy and the appliance of this monetary policy throughout the economy and the financial system. The central bank is also the currency issuer. So even in digital currency, central bank will be responsible to issue those digital currencies. And the central bank is also responsible for the financial stability of the country and the banking system. Central bank is also a participant in the financial system itself. Central bank normally plays dual role as a regulator as well as a commercial bank for the governmental agencies. And finally, central bank would be the monitor and the controller of such an ecosystem. Now, commercial banks commercial banks will be the system operator. They would operate within this ecosystem, but they are also the assets custodians. Now, there has been a lot of debate whether there is a need for commercial banks in a digital currency world or not. Now, I think we can all agree that the main function of banks is to transfer deposits into investments. So I don't see that there is any contradiction with the existing of digital currency as well as commercial banks. Commercial banks will continue to do what they are doing right now. They will do the investments. They will do the cash management for their clients and corporate clients. They will do the money transfers. They will do every type of business that they are doing. But again, they will have more services to offer through the digital currency. Now, third-party companies like fintech and technology providers, as well as payment service providers, will need to be a part of this ecosystem. This ecosystem runs beyond the conventional banking and financial systems. We will need to have technology providers as part of this digital world because simply the name is digital currency. It's cryptocurrency. So the names themselves implies the use of technology. So without having those technology providers as partners within that ecosystem, I think the digital currency will not fly and there will be a lot of challenges. Now, what is the current situation of digital currency throughout the central banks? There are a lot of initiatives that started many years ago, and a lot of initiatives are taking place right now, and a lot of initiatives are planned to start in the coming future. If we take examples, Bank of England, February 2016, they started to study the possibilities of applying a central bank digital currency. Bank of Canada, in July 2016, they announced the regulations for central bank digital currency. They also they called that Project Jasper, and they are right now initiating another initiative to have cross-border digital currency and to study the effect and impact of having blockchain technology as part of international money transfer. Bank of Australia, February 2016 as well, is starting to investigate the cons and pros of digital currency. People Bank of China, January 2017, they completed a trial on blockchain and digital currency. Russia Central Bank, 2017, they started developing a national digital currency. It's not there yet, but they started the development of that currency. And many more. India, Singapore, Netherlands, Germany, France, and many other countries and central banks in those countries are either studying the feasibility of having central bank digital currency or they are doing a proof of concept runs on those digital currencies. And even right now, some countries have already started a live implementation of digital currency. One of them is Ecuador, but it's not based on blockchain. However, it's still a digital currency. Now, in order to implement a central bank digital currency, there will be a lot of challenges. It will not be a straightforward approach to replace an existing currency with a new one. Those challenges are categorized into multiple categories. First one is technical challenges. Now, we have the technophobia, which is the fear of new technologies, the fear of replacing something that is working with a new thing, the fear of having a new complex technology, the fear of applying those technologies over the existing banking and financial services infrastructures. There is another technical challenge, which is the resiliency of distributed ledger technology. If you remember when we talked about distributed ledger technology, the idea is to have multiple nodes within the network to have consensus on each transaction to make sure that this transaction is non-reputable. So maybe some banks or some central banks will have debates whether this technology is valid, whether this technology is proven right now, whether it is the right time to implement such a technology or not. But we also have legal and operational challenges. Many of the existing laws, regulations, policies might need to be updated and revised in order to implement a digital currency. So the existing regulations for e-money might not be valid for digital currency, for example. And if a country does not have regulation regarding electronic money as well, then there is a long way to go before being able to issue such a digital currency. And we also have the issue of interoperability between the existing banking and financial services and the new digital currency. Because we cannot come overnight and say we will stop using the existing banking services and financial payment transfer systems and replace it with digital currency. So they both have to coexist, and there will have to be some sort of interoperability between those two schemes, and even with the cash. A third operational challenge for central banks to issue digital currency would be identity management. Now, again, back to the example. If you remember, we said that Alice will have to sign the message using his secret key, and Bob will have to verify the transaction using Alice's public key or shared key. Now, this identity management and key management will have to be somewhere. If we are talking about PKI technology, there will need to be a trusted party that will issue those keys and be responsible for managing those keys. And if we are talking about millions of population within a country, central bank will not be responsible for this operation. It is not the central bank role to manage those identity management and key management. And hence we said that commercial bank as well as third-party companies might be responsible for the issuing and management of identity and keys, secret keys. We also have societal challenges. Now, in order to roll out a digital currency, there will need to be awareness and readiness for the financial institutions, for the payment service providers, for the payment providers, as well as the merchants and the people themselves. And also, the adoption of central bank digital currency will need to have a network effect, because they will roll out those services, people will start using it, but we need to build the network between people in order to encourage the adoption and utilization of this digital currency. And then we have the economical challenges. Now, what is the impact of digital currency on the economy? Now, this is a debatable question. Optimistic people will say it will have a great impact on the digital currency. Some people expect it will provide around 10% gain on the GDP. Some people say, no, this cannot happen. So I think this needs to be studied on case-by-case basis. So what applies in a certain country might not be applicable in another country. So this is a challenge, and this is a homework that each bank and central bank within the country will need to study, understand, and think of before going into implementing a digital currency. I'll leave you with that thought, and I'll open the door for any questions, if you have any. Thank you for listening.
So they will recover the money.
Yes. Now, the idea of having digital currency and the technology behind it, like blockchain, each transaction is recorded within a block. And that transaction, in order to be recorded within a block, multiple nodes within the network will have to provide consensus between those nodes to make sure that this transaction is eligible transaction and it's not a fraudulent transaction. Now, there are, if we are talking about central bank issued digital currency, there would be other alternatives. For example, what we did is we integrated our digital currency system with fraud management system. So you can do some sort of integration to check the information of the sender and the receiver. Now, some people might say, okay, the idea of digital currency is to be anonymous. So if I send money to another one using Bitcoin, there is no way to know that who is the sender and who is the receiver. But again, if we are talking about a central bank digital currency, this might not be applicable. Because within the central bank and the banking industry, each customer who is part of the network will need to be registered. We need to know the KYC information. We need to have those information for AML and fraud management. So those information can be recorded, they can be utilized, and they can be accessed only in certain cases. So not everyone within the network will be able to see the transaction and the information of the sender and the receiver. Only central bank, for example, and according to certain legal needs, can have access to the customer information. But by having those information somewhere in a central registry, we'll be able to detect fraud and to detect patterns of fraud within those transactions.
Sometimes it takes 2 months, 3 months to realize those things, but in the meantime, customer will pay only within 1 week because of the insurance.
Yes. Now, here we'll be talking about fraud prevention and fraud detection. Now, fraud detection, yes, it will take some time to detect, but in certain cases, after we have those information from, let's say, blacklisted parties or from parties with fraud history, we can do some sort of prevention.
Ali, you have linked very much the digital currency issuance by central banks to the blockchain. But in my understanding, this is not absolutely necessary. You could have a central bank issuing e-money, for example, like PayPal. I mean, what's your view on that?
Yes. Now, the current hype, let's say, and the current trend in digital currency is to use blockchain and distributed ledger technology. But again, this is not necessarily technology. As I mentioned, Ecuador has launched their digital currency and it's not based on blockchain and distributed ledger technology. And there is no mandate for any central bank to issue digital currency using this technology. Any central bank can assess and evaluate any technology and issue their digital currency without having the need to use blockchain, for example. So it's not a mandate, but it is the hot topic, let's say, the trendy topic throughout the internet and between central banks and commercial banks right now.
Thank you, Ali, for a very fruitful presentation. But I don't know, as a vendor, a payment system vendor, what role are you playing, in making the public, aware of this digital currencies? Do you play any social, role in making people aware of such, a mechanism of digital currency and how the adaptation is happening in other countries?
Yes. Now, we started doing this role, but internally within the company itself, between the employees. Now, if you come to visit us, you will see a lot of our employees having Bitcoins. They started opening digital currencies. They started to get introduced to the concept of digital currencies. And as we are developing our products on the digital currency, those small things and interactions with people using those applications, it will help us understand the needs and the demands of the people, as well as developing the product itself. Now, we participate, whenever we have a chance, we participate with conferences, with educations, we hold conferences and events in the universities in order to introduce those technologies, not only digital currency, but e-payment in general, to the youth, to the people that will be using such technologies. Okay, thank you, everyone.